for the rest of the week?
There's actually lots happening on the market today despite the lower volumes going through. I guess in the region we did see that flash HSBC PMI number, the first read that we get into the Chinese manufacturing space for the month of December, and that came in at a 3-month low. 50.5 points was the reading, below expectations of 50.9. So the Shanghai Composite down by 1.4%. We also saw the Tankan survey. Now this is a survey of manufacturers in Japan, and while we saw business sentiment quite strong, we saw the outlook looking quite weak, and the Japanese market down by about 1.2%. But I think the most surprising thing during the Australian session was the fact that we saw the US futures down by about 0.5%. This is quite unusual to see a move of this size during the Asian session, and there was some chatter that a large block trade had gone through. Now, it will be a big week for futures and options in the US. It is triple witching hour this week, so we will see expiry of stock options, index options, as well as index futures. And I guess a bit of positioning before that FOMC meeting, which is the biggest event of the week on the 16th and the 17th of December. So Thursday morning, our time, we'll get the result of that, and the market's carefully watching that to see whether we get tapers. But locally here on the market, the banks were under pressure. I think the two key standout areas today were the retail, the department stores, and the mining services space. We saw Myer up by 5.6%, David Jones up by 2.2%. We know that we're in the most important part of the year for sales for these department stores. And on the other side, we saw mining services companies a phenomenal day. No news coming out, but Monadelphous was up 10%, UGL was up 9%, Boat Longyear was up by 8%, and we also saw Bradken up by 6%. So an outstanding day in that industrial space.
Steve, a prospect of a Santa rally. I mean, do we have it at the end of November, beginning of December, or do you think there's the potential for a late rally?
The traditional Santa rally occurs between Christmas and New Year's, so we're still yet to hit the period. And it usually happens over that very low volume period over Christmas, New Year's, when most of the market is on holiday and the market struggles to hit $2 billion per day being traded. But if we have a look at some of the numbers, there does seem to be a bit of a Santa rally effect. In fact, over the last 20 years, since 1993, we've seen 16 years where the market has actually seen an increase in that time. So only 4 years where we've seen an actual loss, and the average gain in that time is about 0.9%. But the month of December has usually been a positive one for the ASX 200. In fact, in the last 20 years, once again seeing 16 years worth of increases in the month of December. Not exactly the same and not a high correlation to the Santa rally, but the average increase in the month of December has been 2.1%. I guess with the market, all eyes will be on the FOMC this week, and that's going to dictate our direction for the rest of the month. But also we'll see those bank dividends being paid. On Tuesday, the ANZ shareholders will receive their dividends. On Wednesday, we'll see Westpac, and then on Thursday, we'll see NAB. So hopefully some of that money will find its way back to the market during that Christmas rally period, and not all of it will be spent at the shops.
As the potential growth areas, if you like, the leaders on our market next year?
On an index level, if we have a look at what the market's predicting, the two biggest areas on our market are the banks and the materials space, the resource area. And if we have a look at the banks, they're forecast to grow at about 5%, so probably won't be the banking space. But if we have a look at materials, growth of about 30%. Now that seems like a lot, but the last 3 years we have seen the resources seeing a fall in our profit year by year. So the fact that we are going to see a bit of a rebound based upon commodity prices improving is good news for the materials. So the big majors like BHP, Billiton and Rio Tinto, Fortescue, we'll be watching them. We've seen the iron ore prices holding up very well. And of course the oil price we'll be watching very carefully as well. So in terms of the index level, it will be the material space that powers along the market rather than the banking space. And in terms of strategy, I guess at this point in the cycle, a lot of the large caps now look overvalued or look expensive, and it becomes harder to find bargains in that space. So usually what investors or traders start to look for is growth at reasonable prices and earnings as well as price momentum. So that usually is the mid-cap or smaller cap space, which has been overlooked by most of the market, while the large caps have been rallying for the last 2 years.
We quickly want to look at some of the corporate news out today. Firstly, Julia, we spoke about a little bit earlier today, Wesfarmers and tying with the IAG deal for their underwriting business. What did you make of it?
A nice profit being booked by Wesfarmers, $700 to $750 million pre-tax. And I guess for Wesfarmers, they've received a good price. So shareholders quite happy there, and the stock up 0.5%. For Insurance Australia Group, this acquisition will be EPS accretive mildly from year one and then more than 5% from year two. It will mean that it is a top commercial insurer in Australia, and it will also own about 40% of the motor insurance market. Now, they will be doing a capital raising to help pay for this, but the capital raising done only at a 4% discount. So that's a good sign for Insurance Australia Group. So I think a good result for both companies.